Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for April 1st, 2020. Today we're taking a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. Now, before I begin the analysis, it's important to recognize the fact that in about a half an hour or so from now, from the recording of this video, we will have some news coming out of the U.S. ADP non-farm employment change. There could be some dramatic changes in employment data in the next couple of weeks. So just be aware of that and how that may impact the market positively or negatively, specifically the US dollar today, and how that will affect US currency pairs with fundamental data coming up not too long from now. Other than that, looking here at the chart, a couple of trends there. Of course, long term, we have been in a downtrend. We're going all the way back here to the beginning of the year, very top of the chart. We started this long term downtrend. First leg pressuring lower, a little bit of a bump higher, top of the black trend line, significant leg lower, all the way down into historic lows. Recent couple of weeks, a little bit of a pullback, a little bit of a retracement of that black trend line, pressuring back higher, and now the market's starting to slide south once again this week. So the question is, will it continue to slide south? What that means is we're going to look for the US dollar to recover. Positive US dollar movement. Dollar goes up. This New Zealand USD would go down. So we'll keep an eye on the US dollar. Positive movement after the news for the US dollar sends this lower. Negative movement, if the dollar falls dramatically, we'll look for the continuation of the blue trend line here for the New Zealand dollar. Speaking of that blue trend line, let's take it down to the 4-hour time frame. You can see the market's been moving up pretty nicely over the past couple of weeks along the blue trend line, but currently the market is now under that blue trend line. We broke through it, the pink zone, and now holding underneath the pink zone, 59, 60, 80 over the past day or so. Now we're trying to get underneath the purple zone. This is what's got my attention today. The 0.591020 level, the little purple shaded area that's here. Let's talk about history of this zone. You can see right here on the left hand side coming down where the black circle is, you can see support there into the purple zone, resistance pink zone, kind of like what's happening right now, and the break of the purple zone and continuation lower. So that's interesting history for this purple shaded area. Then we go right here, and you can see the similar thing. It was coming, it hit the pink zone as resistance, hit the purple zone, then in this case made the new high, but this was within the uptrend. So we're continuing to watch for that as well. There was one instance right here. Actually, there's been a couple of instances of resistance under the purple zone here and this spike high right here. So there are two instances of resistance at that same zone. So that's why that purple shaded area is there, 59, 20, 10. That's why I have it right there where it is, because of the history of sometimes support, sometimes resistance. So when we're in this area, even over the past couple of days, we've seen support here. When we're in this area, that's the two potential scenarios. Either it gets back above the purple zone and goes up, or stays under the purple zone and continues to go back down. That's why this area is so important. Interesting enough, taking Fibonacci from the lowest low down here, down at the bottom of the black and the blue trend line, to the current resistance high of the blue trend, puts the point 236 at 59.27. We're just underneath the 236. 382 of that range sits down here at the green shaded area. So for the day today, I'm watching for the market. If it will stay under the purple zone, we're going to target back down here to that 382, the green shaded area. The risk right now is that it gets above the purple zone and starts to turn around and go back up. Pink zone becomes your first next target, and of course the yellow zone beyond there becomes the next target beyond the pink zone. And of course, if we can get through the green zone, the orange zone all the way down here near the 57, 70, 60 area, top of that orange level will be the next target lower below the green zone. So we're watching for it to stay underneath that purple zone. Now, I don't often go down when we're talking about these colored shaded areas to smaller time frames, but take a look at it on the 1 hour time frame. We're clearly already underneath it on the 1 hour time frame. So that's definitely something that has my attention. Definitely keeping an eye on the news and see how that's going to impact all of the U.S. currency pairs in about a half an hour or so from the recording of this video, but definitely watching the market underneath this purple zone as a potential short towards the green zone. The risk, of course, is that the market turns around and goes back up for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.